Hi, in this video I'm going to cover the subject of spotting the end of a trend. Probably one of the most important videos I've done for some time. It's an area which a lot of people try to do and fail miserably, and hence why we have around about 80 to 90% of retail traders losing money. So here I'm going to give you some factors which you can put together and hopefully give you a stronger case for spotting the ends of trends. Now, what I'm going to do is there's really six sections on this. We'll split them through very quickly, going through them. Now, some of them you'll see I've done previous videos on, so you can go and see them in some more detail. So firstly, we're going to look at market structure. So the structure of a market can be shown by the price action itself. Now, it's quite easily after the event to see the structure of a market. So what I'm showing you historically is just literally how the market's been running. But whatever we look forward to, it's all based on what's just happened quite often, or what's happened previously. Anyway, it's historic, and then we're using that information to make some sort of sense of what might be happening in the future. Now, with market structure, what I'm looking for is the very simple basis of lower highs and lower lows. So we're starting to see the market rolling over here. So it put in a top up here, just slightly short of a double top. Then we sort of seen this move coming away from that, and then it's putting in lower highs coming in here. So it's put a lower high in, picked out another lower high, and off it's going. So it's gradually putting up a picture of lower highs. Now the picture's already in here-ish, or before here, of the lower highs. It's given us the clue. It's broken prior lows over here. So this market at this point, the structure is looking reasonably well for the downside. Then we've got these moves coming in over here. No doubt they'll be on the lower time frames, or even on this time frame there'll be some divergence onto these areas, but then you've got a continuation, lower highs, lower lows. So the main structure, keeping away from divergences for a moment, is pointing pretty much downwards. It's given us lower highs, lower lows right the way through there, and then we've come around to this turning point. And at this stage we haven't got too much. This is a weekly chart, so it's showing some points of there's certainly a retracement here. So we're seeing a retracement and then a continuation, and we're currently in a retracement, or is it? So with the structure though at the moment, that could well be a retracement in the bigger move. But all we can tell is what we're seeing there at the time. The structure, it's certainly turned from the lows back here and it's pushed up. So that's what I mean in terms of structure. And the lower highs, lower lows, so long as we're getting those, really we're in a downward market. And when we start getting higher lows and higher highs, we're in a structure of an upward market. So next I'm going to look at within that structure, what's actually happening, and look at the retracements. So whether you're looking up or down the market, we want to look at the retracements. And what we've seen here, initially there was very shallow retracements in this part of the move that occurred. So very little. Even this movement here, relatively okay on that smaller sort of pattern, it was probably about 50 or 60% or 78%, somewhere in that region. But in the bigger scheme of things, it was not a lot at all. And then we sort of start moving down here, and the retracements get slightly bigger, but it's the frequency of retracements as well. Here we had very little, and some reasonable gaps even on this sort of retracement upwards a little there. It wasn't flying ahead, but we're starting to see these retracements occur more frequently and slightly higher, so the pitch is a little higher. So this is suggesting to us the market might be turning. That's all we can take from that at this stage. So the next tool that people tend to, and I said it, the next tool, a lot of people use the tool of divergences all the way through their trading, and that's how they trade, by divergences, which is fine, but you're going to have at times when we see a market structure appearing as it did, we're going to sometimes get a number of divergences that are coming and showing maybe on the lower time frames, or even the current time frame that you're looking at, yet they still fail, and you can end up with 2, 3, 4 failing on a row. Now when you get these failures, of course you can put stops massive distance away or whatever else, But the psychology behind that is probably the wrong type of psychology you could really put yourself under, in terms of you're either sitting underwater in positions a long way, and it's continuing and it's getting worse, and you may be getting stopped out on one and then another one, but you've got these big stop outs, or even if you're a bit more risk averse and you put in closer stops, you're getting stopped out 1, 2, 3, 4 times possibly on these moves. Psychologically, that's a big indent. So we've got to put this divergent stuff. It's good, but we've got to put it together with the other factors and help build the case. So let's look at this market here in what it showed us on the way down. So we had some divergences. We had a divergence here for sure. Oh, sorry, I'll put the MACD in. There you go. You can use the RSI and MACD, it doesn't really matter, whatever you're using to look at the cyclical approach of the market. But you can see the MACD here, it was diverging. It did get a day up, a week up, and some traders may have from that within that week made some money. But relative to the risk that you're probably putting on there, it wouldn't have tied in too well. And then it's rolled over again, and then you get in here, there's no divergence showing on this time frame. You come down here, we got some divergence into this move here, but realistically it's just rolled and rolled, and then the MACD's worked off a little bit for a moment, and then you get this move here, which on the lower time frames you can come down the time frames and look at this. Let's just go down to a 1 day rather. So this is a daily chart now, and start looking back here at what was happening. So there's your divergence occurring across these lows here. Well, it held longer, that's all I would say. So it held longer, but it never really triggered at that point. But again, we're seeing these divergences that were appearing, and there was another one here, look. So there was yet another divergence occurring here. So they were happening, this one then sold off again. So divergences are fine, but there's a different way of using them. What I use referring back to the video I did on MACD or RSI, whichever you're using, I look at the high between the two, and if it breaks the high between the two, then for me, in the bigger scheme of things, it's moving. If you're just literally trying to buy it all the time, very aggressive entry, you might get into some of those beautiful bottoms, but at the same time you can be in a lot of bottoms that look quite nice but then roll over. So here, it's shown me a divergence again. Signals there, hasn't triggered yet. To trigger it, it would have to break this high here, and it certainly hasn't done it yet, and it's sold off some more. But there's divergences. Sometimes it's a lot cleaner, and you'll get the divergence straight in without hardly any move. It'll break, and that'll be the turn. So they do have their use, and they are one of the factors I'd look in for a turning market. So next, I'm moving to something that's quite obvious, and yeah, it's probably overlooked a lot of the time. And I'm going to look at Trendlines. They're a particularly good tool. So I'm going to take this back to a weekly view. So we've got a weekly view here of what's going on. How to draw the lines? Very, very simple. You're just looking from high to, in this particular case, high to high. So we're trying to identify what was giving us the turning point down here. You've got high, lower lows in between. So it was particularly when this is broken here, this becomes more significant. Initially, you'd probably been drawing it from this point to this point when that lower high had been confirmed. That would have been getting quite messy around this time frame and made it a bit more confusing. So that's probably why people get a little bit put off them. But you've got to adjust. Next point would have been to pop it on here. So let's just pop it on there. So there you go. There's a trend line. Pretty decent. It didn't really get broken to here. So of course it's not at the most fantastic timing frame. But what had happened before then is the market had really fallen away from this trend line anyway. It had fallen away, and there was another trend line to be drawn as it progressed. And you've got to look at what's going on here. So if you want something a bit more aggressive, you've got to be a bit more aggressive and move in another trend line. So let's just pop on the other trend line here, and we can pop it across this high here or this high here. It really matters. I'm going to pop them across the former. There we go. So I'll put it on the first one. Now it's just, don't need all that. So now you can see it nicely. You've got the lower highs, and you can see the tests of this trend line as it's come through. We've placed it off really. I placed it off this second one here, which was Fair enough, it's come back, it's retested it, gone away, air kissed it, pulled away, retested it, and run off. Eventually it's broken. It actually closed up on this week here, so we've got some sort of view of it. So when we come down the time frames now, we can start putting things together. I'm going to do that in a moment, but that's trend lines, very simply applied. In the current situation, what we've got going on at the moment, it's very difficult to draw the trend line up. There's a near-term one that's running up below these lows here. Let me pop it on actually, so you can see the near-term trend line of what's developing, because we need to look at that. So that's been broken on this case. But in the bigger structure of the market, we know we can have retracements. But for now, that trend has been broken. Right, let's move down the time frames and move on. So we've got the weekly situation sorted out here. You can apply this to the daily. Before I do that, there's another couple of factors I just want to look at first. Okay, so the fifth element I'm looking at here is previous highs and lows and key numbers. So there's two parts of this effectively. Looking at the previous highs and lows, well, for the euro dollar here, you would have had to go a long way back. In fact, if I go back to a 4 monthly make a 4 monthly chart and look back, hopefully we'll have enough data to show us. There we go. We have. You see where the current low has been. It was. I mean, there may have been, if I've looked at this on a monthly or something else, might have been some other support around these areas, but there wasn't too much around that area. Previously we'd got down close to the key numbers, and this is where I refer to key numbers, because we were looking at parity, a 1-to-1, and it was only in the very early days was the euro dollar below parity. Back here, this was just the running of it. It wasn't actually in use as in circulation as a currency. So really I'm more interested in what was going on here. We haven't got anything too key there, but it's important still to look back on there. And as I said, the next important thing is to look at the round numbers, the key numbers here, parity being one of them. As soon as a market gets towards parity with another, then there becomes support and resistance around there. We didn't get to parity back in 2015 when it was running, 2016, never got to parity, but this time obviously we did. So it's just come back to more recent data then. So looking at this, it actually popped below that, and it could have gone further, but that parity level of round about 1, if I was to actually draw a line on it as opposed to be lazy and put my cursor on it, you'd have found support. It then became a bit of resistance as it came through resistance, and eventually pushed back above there. But a key level and an area, a range of price which could see the market turning. So there you go, key prices and previous highs and lows, very important. Okay, so the first non-technical viewpoint is to look at what's happening on the fundamental side of things. You can look at the commitment to traders reports, and that will give you some sort of idea as well, and you can back it up with those. So you can have sentiment, the big money sentiment. You can look at the fundamentals, and central bank decisions is pretty key. What we saw here as the euro was really selling off was the Fed starting to tighten interest rates and push and push and push. And more recently, we'd seen the change of heart within the ECB, and they started catching up and starting to increase interest rates. So now we're in this point where we are at the moment, and it's making it very difficult because it's looking like the US interest rates might expand a bit further or continue rising for a little bit further. But maybe not. But it's throwing backwards and forwards out there, and the ECB are sort of they're still going strongish, but then the people are looking for the end of that. But those fundamentals are certainly having an effect on the market, and will have an effect on the market in the bigger scheme of things in particularly. So keep an eye on the fundamentals and follow through on what's happening there. That in itself could give us a case of a game-changing turn. So that could be the end of the trend, which it pretty much became as we got down to these lows here. Okay, let's put it all together now and look at the turning point here, the clues in the technicals, and the fundamentals, well, I've just gone through that, the clues that were sitting there, and then we'll come up right up to date and look at what the situation is there. So firstly, let's look back here. So up until for quite some way, the structure was certainly to the downside, lower highs, low lows. The key point then when I talk about retracements, that we started getting more frequent retracements, and the volatility or the size of those retracements started to get a bit bigger. So we had these retracements more frequently and slightly bigger. What else did we have here? None of those things give us an entry yet. Well, we've looked at the divergence were occurring. There were a number of divergences occurring through all of this on these time frames. And if you go back to 1 day, you see the last divergence that came in here was actually here. So the turning point then we got as a level over here. But when we go down the time frame a little bit, it gives us an idea whether the structure is actually changing. And we were fortunate enough, the divergence really wasn't the catalyst here. We had the structure, we had the very fact that the market was changing shape here. We had another retrace occur here on the dailies. It pulled back, and what it do, it turned and it gave us a higher low. And it's really, I mean, yes, we'd had some higher lows back here, but they hadn't broken the trend. This had actually, most importantly, broken the trend line as well. So we had the divergence, we had the weakness showing in the market, we had an early divergence, but more importantly, we had the trend break and a confirmed high low. At this point here, it closed above the trend line as well. That was all pointing towards further upside. Now, this is the point of denial of what we saw then. Of course, we saw the sell-off back down again. Traders don't believe in the initial movements, and the first sort of waves and whatever else can be very messy, particularly on a big move, and this was pretty messy at the time, this even on a daily basis here, and we saw the potential for this to roll back further. It rolled back below the parity, it was sitting up here somewhere, but it rolled back. But then there was another chance. So if you'd missed or taken this and pop stops down at prior lows or whatever you've done, even if you've got it wrong and got early in this section here, there was an opportunity coming back in, and from this point here with the break of the trend, everything all layered up there, fundamentals that went behind it, the sentiment started changing on the euro as a currency, and it started to get bought more. In fact, that happened from about 26th of October, I believe. We've then seen this move coming through here, and it's proved itself so far. So where do we sit right this moment? Well, structurally, we've been seeing these higher lows. It was quite a clean movement up here. We had a fundamental aspect that came into play way back on these highs here, where the Feds are seeing such good growth. It looks like the inflation's not under control, so they might have to increase rates longer. That's then had a knock-on effect into the markets. ECB is still sort of saying, well, yep, we need to put rates up still, but it's a change of structure in terms of what the Feds have been saying. So on that basis, it's back a bit, and it's choppy, and in the bigger scheme of things, when you look at the overall structure, yes, it's broke its trend line here. Let me just pop that into the right place again. So it's broken the structure. At the moment, it's a little bit on no man's land. It has put lower highs in here, and it could yet still fail. So as it's sitting a bit sideward as well, we've seen lots of sideward price action or ranging price action going broadly to the side. We need to see something a little bit clearer in this market to make it absolute positive. So when you get a market like this, you just got to be a bit more patient and let it show its hand a little bit more. As I say, it's sort of structured its way down there. It could just be a 1, 2, 3 or an ABC correction. Break back above this sort of 108 area would be a bit more positive. Likewise, a break below the lows would just suggest that then it is putting another lower high in, and let's take the ride to see where it takes us to the downside. Okay, hope you found it useful. If you do, please subscribe to my channel for more like this, and give me a thumbs up. Much appreciated. Take care.